Welcome back to my channel. In this video, I wanted to cover Chinese stocks. The US market is expensive and the market has flourished for some time. We've seen a really nice rise since the lows in April. And it might be a good time for me to look at some Chinese stocks. Maybe that's going to work better in the latter half of 2025. So far, so good in China. I have Alibaba and Futu, both are doing well. Other stocks in China are doing really, really well. So I'm going to review the list of stocks in China and actually dive deep into a new company, Finvolution, which came up in the live stream yesterday. And I've been taking a look at that stock as well. So let's get into it, see what China has to offer investors at this time. So as mentioned, a lot of stocks are doing really well in China. If you look at NetEase, it's up 49% year to date, Tencent 82. We've got Futu up 63%, Xpeng 51. I mean, these are really, really good looking returns year to date. And the economy in China is supposed to be doing better. And I say better because a couple of years ago, they really had a lot of supply chain disruptions, mainly due to the COVID lockdowns the government was instituting. And they would completely shut down factories, and that really affected economic output and overall supply chains. So that's completely behind us. So there's no disruption there. The other thing about Chinese stocks is they are making a lot of connections around the world and selling around the world, especially the EV markets. They are flourishing in countries where there's less discretionary income. We don't see them a whole lot here in the United States because we have the most discretionary income. Not of all countries, but I would say we're one of the wealthier countries in the world. We also don't see their phones because we like Apple phones and American brands, but Xiaomi, the phone makers, flourishing around the world. So just China's really doing well. So I'd like to continue to pay attention and see how I can have my capital work for me in China. Alibaba has been doing okay year to date. It's up 28%, but it's been fading since the high it reached in March. I wonder what's going to happen next. The stock was flying high, $147 a share, but it's really settled down to 108. The stock has a PE that's really reasonable at 14.7. When you look at China stocks, automatically gets discounted. It's if the same company existed here in the US, it'd probably be worth twice as much. But the PEs are really reasonable in China. PE of 14 is very reasonable considering that this is Alibaba. Market cap's 246 billion. This is the biggest stock in China, located in China. Analysts think it's really discounted, and I'll show you where I value Alibaba in a minute. Overall, the business is doing well. They're growing. They are a fairly big company. They're doing really well in China. And I think they stand to do even better. The economy's really gotten back on its feet well in China, and I think these guys are going to do really, really well. Alibaba has been able to grow by really partnering with a lot of different companies that sell within China. This way, the company doesn't really have to hold inventory, create products, and so forth. It actually allows its customers to really flourish on their platform, and then they participate in the success by collecting profits and generating cash flow. That's a really good way of scaling up a business. Now they're gigantic. They're a really big brand, and I really like that about the model. It's like the sharing economy in China. Now, I've run the calculations on the current value of Alibaba using the free cash flows and looking at a net present value of those cash flows. And I've also looked at the earnings per share to look at the profitability of Alibaba. And combined, I believe that Alibaba is discounted by 29%. And that's a good discount, and that's using a higher discount rate. And you can think of discount rate as my rate of return that I want from a particular investment. This is higher than, let's say, what I use for Amazon by two full percentage points. And that will give me a higher rate of return. So overall, the valuation looks good for Alibaba. It's a strategic company, it's discounted, has a really good solid moat, and I will continue to own Alibaba and buy shares on pullbacks. Futu Holdings is a lot like Robinhood, except they operate in Hong Kong, China, Japan, Korea, and other countries in Asia. I think it's a terrific business. Part of the reason is that there are a lot of people that have savings in Asia that are getting more and more interested in investing in stocks and crypto and things that will drive a higher return on investment than just putting your money in the bank. So Futu Holdings has really been growing fast, been very profitable and generate terrific cash flow. The stock is flourishing. It's having a really good day today. It's up 6.89% as I speak. And for the year to date, it's up 85%. It's great to have Futu in my portfolio. It's also great to have Robinhood in my portfolio. That's been flourishing. And I think it's because retail individual investors are waking up to the fact that they could probably do better than putting their money with a mutual fund, an ETF, or having a wealth advisor manage their money. They can learn over time and just become a better investor and be able to make a better return on investment. So, having said that, Futu is flourishing in Asia, growing really well. The company has revenue growth rate of 54%, and that's on a substantial size company. So that's really good. They produce really good free cash flow, really good profits. Analysts believe they're going to keep growing the business. This year, they're going to grow by 48%, 10% in 2026, and 15% in 2027. If we continue to see these valuations on stocks, I think this company is going to continue to flourish. I also believe that stocks in China are depressed, and at some point, they're going to really start going up. They've had a good maybe 6 to 8 months stocks trading in China, but for the last couple of years, they've really been depressed. If you see higher valuations of stocks in China and in Asia, I think there's going to be more trading that's going to be done on Futu, which is a real positive note. When I value Futu, I come up with a 36% discount. That's after I look at the net present value, all the free cash flows they're going to produce in the future, and as well as their earnings per share. That's a really good discount, even after the company stock has really gone up in value. I use an 11% discount rate, which is much higher than the 8% I'm using on Robinhood since it is out of my home country. So overall, Futu continues to go up, and I'm really glad that I own it. This stock here, I'm not buying on pullbacks just because I own enough and it's gone up a lot. But should it have a substantial pullback or on earnings, when it provides earnings, if it really changes the valuation for the better, I may put a buy on Futu Holdings and start to accumulate more shares. And the third and final company I'll talk about is Finvolution. This company came up in the live stream yesterday and it looked really good. This is a fintech company, but they do lending. So I'm going to treat them like a bank. When I value the company, I'll use book value and also use earnings per share. The PE on it is really low, incredible. And it's incredible considering that the stock is up 400% over the last 5 years. It's up 110% over the last year. And year to date, it's up 50%. Geez, this has just been really performing great to the point where even though it's appreciated so much, its valuation is still there. The company is growing their revenues, not that fast, but it's still growing. Their fundamentals are just really strong when it comes to profitability. When I value this stock, I'm going to show you in a bit that the company still has a really strong value. Looking at the forecast, we have two analysts to cover the stock, and they think it's discounted by 14%. They expect this stock or the company will begin to grow a little faster this year at 13.7% and then 11% in 2026. So that's probably what's helping the stock do so well. My valuation of Finvolution is quite high. In fact, I think it's discounted by 76%. That's after the stock's really run up. The reasons for it is their addressable market is massive and they are able to increase their book value substantially over time. Their book value is very high. It's 60.31 on a per share basis. That's incredible. And their current stock price is only $10. So the book value is way higher than the book value. So that's a very good ratio. Earnings per share is also excellent. Just using a 12 PE, I get to a 61% discount. So this looks really good. In my book, this is a buy. I'm giving it a little bit of time just to make sure I'm researching it correctly, but I'm probably going to start buying into Finvolution this week. And this will be my third stock in China, as well as an ETF that I own. Picking individual stocks can be tough and takes a lot of research. And it's even harder when you're investing in another country because in my case, I don't really know China. I don't know the companies all that well. So I have to do my research and it's a little harder. So I also, in addition to owning Alibaba and Futu, I own an ETF, this one, the Franklin FTSE China ETF. And this gives me exposure to a wide array of companies, which include Tencent, includes Xiaomi, includes PDD, some really, really good companies that are in China. And this ETF is doing well. Year to date, it's up 18%. Over the 1 year, it's up 29%. So this ETF is getting the job done. I'm glad that I own it. So at this time, with an expensive stock market in the US, it is a good time for me to consider buying more in China. I'm glad this topic actually came up coincidentally yesterday on the live stream, just reminding me that, hey, this is a market that hasn't been going up while the S&P has just been flourishing over the last couple months. So maybe it's time to maybe give China a little more of my attention and a little more of my capital. So that's my video on Chinese stocks. I hope you found it interesting. I invite you to become a member of the community. Become a paid member by visiting the homepage of my YouTube video. You'll get excellent perks. You'll get invited to investor only calls, the Discord, and have more access to the channel. On live streams, you can request stock tickers to be reviewed, and I'll be sure to answer member call questions during the live stream. So that's it for now. Thanks for watching, and good luck with your investments.